Welcome, everybody. Happy to be with you today. It is Friday, as always, and that means we get to talk about, excuse me, income generation and take a look at what is happening in the market. Thank you, Randall, for giving me the video and audio check. I really do appreciate that. We are going to have to shift from what you usually see me, some of the tools you usually see me use today. I'm sure you've seen some of the headlines about some of the outages that were caused by a problem with a company called CrowdStrike and some of their, they had a faulty update that has taken down a lot of systems in the financial, healthcare, and even airline industries, just to name a few. And that's even extended to some of the market data that I usually rely on, specifically from Schwab. So on my screen, you can see I've switched to another account that I use for a small IRA with Fidelity. So this is just not a recommendation about a specific broker. This is just trying to get to where I can get useful data for the things that we want to talk about today. So that hopefully explains what's happening there. As always, like to try to operate in an open mic format and kind of have an open discussion and lots of participation in this webinar. So I've unmuted everybody in the GoToWebinar software and just ask you to manage your microphone settings for me. If you have something to say, if you have a perspective to offer about some of the things we talk about today, feel free to turn on your microphone from your side and go ahead and speak up. If you prefer, you can also use the questions panel in the GoToWebinar software. I do pay attention to that throughout the course of the session today, and we'll try to fold the comments or questions that you raise there into our discussion as well. So, with that said, we've got a good number of us here so far. Hopefully, we'll get a few more as we get things rolling. How's everybody doing today?
Doing fine.
Outstanding. Good to see you, Todd. Gibbs says he's doing well. Outstanding. It's been an interesting week. The market has given us some good opportunities, and that's been kind of nice to see. Some of the stocks that I've been working with have been rallying as some tech stocks have come under a little bit more pressure. There's been a little bit of a little bit of rotation away from some of the big heavy tech names in the last few days, and you've seen some of the other more conservative, less exciting stocks, including some of the ones that I've been working with, have been making some nice moves. So we'll certainly have some good things to take a look at. But let's go ahead and dive in. I expect we will probably also have some time to look at some things that you may be interested in, and to compare notes, and again, feel free to offer your comments and perspectives as we do. So let me switch over here really quickly to my track record. This is just to show you kind of where things sit. This is, like as I mentioned, kind of a big day, just because there's 1, 2, 3, 4 positions that are all set to expire today. 2 of them are put sales, and 2 of them are covered calls. So we'll get into those as we get things rolling. Let's go ahead and start with Tyson. And give me just a moment here. Had a couple of people jump in. There we go, Victoria Buck. All right. Hi, Victoria. Glad you're here, as always. So let's take a look at Tyson really quickly. This is a put sale I've held for about a month, and that has given me a pretty good put sale for the time period. Pretty conservative, perhaps not as buzzy as some might expect, but that's okay. We did look at this last week to see where things were going, and it is seeing quite a bit of push to the downside. Oops, sorry. What's going on there? Come on. There. What? Give me a moment. Interesting. Okay. Sorry, my drawing tool is not working the way that I expected. So what we are seeing on this one is some increased in downward momentum right now. Just today, switch to a different tool. Oops. There we go. Okay, that's not working either. That's interesting. There we go. All right. Just in the last day, it had been rallying pretty strongly, and now we're seeing it drop back a bit. Relative to where I'm sitting though on this, I sold the $55 strike price, so this would have to pick up quite a lot of momentum to the downside in order to see an assignment here. So for now, this is looking pretty solid. It also does mean that obviously with the distance away from the stock's current price that we see it 59.36 right now. Let's go to the options chain. There we go. And I'm going to need to expand the strike prices here to see the one that I want. Okay, here we go. No, sorry, that was not what I wanted. Barry says, CrowdStrike almost took out your digital pencil. Yeah, almost. The default tool that I prefer to use is not working, and so I think that might have something to do with it. I don't know. It may. I don't know. Maybe I have to just simply restart my computer, but we'll see. So the $55 strike that I was working with. There we go. Come on. Wow. This is there. Right here. The asking price on this is 5 cents, but there's a lot of open interest here, but no volume. That means that if you wanted to wait for the option to come to a price that you wanted, and do like a lot of people in our group like to do, and set a price and wait for the market to come to it, you might have to wait. This is going to be expiring today, so it's as the market continues to move towards closing today, you're going to see whatever time value is left just melt away. So if you set, for example, if you wanted to close this out early, set a buy to close limit price at 2 cents as opposed to 5, you may very well be able to get that. But at the same time, the next question is, what do you do with that money if you are going to go ahead and close that out now. This is a question, are you going to roll it up? Are you going to go out a little bit further in time? Certainly staying at the 55 right now would really not be very attractive considering how far the stock has moved. But maybe let's see, we've got, let me shorten up my strikes here so I don't have to scroll as much. Can everybody see these prices okay? Let me just go for clarification there really quick. Okay, thank you, Gib. All right, so here's today. Let's minimize this one. Here's 7 days, 59, about a little under 1%. That's not terrible for the first out of the money strike price in 7 days, but 75 cents for 59. Again, we're looking at pretty limited volume and open interest here. And some of these numbers, let's face it, some of this data in terms of how much volume is happening on these, some of this is going to be impacted by that CrowdStrike outage right now. So that could be an interesting element. Let's see, 14. Wow, from 14 days we go straight out to a full month. But this is kind of interesting, isn't it? Come on, give me my pen. Wow. There we go. Here's the 57.50, which is about a dollar and a half away from the stock's current price, a little bit, maybe a little bit more than that. So this is quite a bit out of the money. You can get $1.15 for this one at the 57.50 strike. So that's enough to be interesting, I think. Oops. Sorry, let me go back to my pointer. So we have $1.15 on the ask. So you get 2% for a month on this. If you wanted to buy if you were in this position, wanted to buy the option back from the market today, hang on to the vast majority of that premium, and there's 2% there. And thank you, Gib, for this comment. 26th of August, it gets the earnings risk factor. And so this option, thank you. Volatility here is starting to pick up, in part because there are earnings coming up. And so here we are right here. So this is scheduled for August 5th, it looks like. So this does cross that earnings period. So that is something to think about. Whether or not Tyson would be a stock you'd be willing to hold across an earnings announcement, or an open put sale, excuse me, across an earnings announcement. The answer to that may be yes or no, and you're not necessarily wrong either way. Any other thoughts on this one? Sorry, I'm kind of stumbling a little bit because my tools aren't working for me the way that I want, but let's get some discussion. What do you think? Kip says I would look again on the 6th. So wait until after the earnings announcement, right? And this is a stock. Thank you. I appreciate that comment. And again, all comments here are going to be welcome. So, if you have a different idea, please do share. But if we look, around these earnings announcements, here's May, and we can see a really large candlestick. This is, it peaked up here around, looks like what, 62? Yeah, $62. And on the earnings date, it dropped all the way down to 58. So this can be volatile around earnings. Here we are in February, again, from a peak at around 61. Within the matter of 4 or 5 days, it was down to 51. Here's a little bit of an upside move in late last year, where excuse me, it went from about $45 and started a nice little upward. This prompted a nice little upward surge up to that peak around 61. So depending on how this shakes out, this could have some volatility coming up, and especially on or around that earnings date. So that is certainly going to impact any decision you might make about trying to work with Tyson. Victoria, Microsoft 365 was down the whole night and affecting our internet flow. Yep, that's what we were talking about. It was, it's being seen most visibly from CrowdStrike, which is a cybersecurity firm that is servicing a ton of enterprise and industries. They applied a Microsoft 365 update that was faulty, and it's impacting all of those financials, banks, airlines, healthcare systems, as I mentioned. That's just to name a few. Those are certainly not the only ones. So that is coming to play here a little bit. And it is a reason the market, I think, is today, if we look at here's my watch list, you see a lot more red than green, and I think that's got a lot to do with it. So. Antonio, thank you. Haven't seen you in a little bit. Glad you're back. He says, if you want the price to go up, this is a beautiful pullback and love it in chart analysis. Recent earnings turnaround from the past trend. Yes. Now, and thank you. This is a stock that is nearing yearly highs, right? And it is very close to this peak up here at 61. We're down close to 59 now. So it is pulling back a little bit. The slope here of this upward trend, and because I can't draw, I'm going to use some of my charting tools here. The slope of this upward trend, all the way just starting from early June, certainly is impressive. Could provide support down here in this. Where's the 200-day moving average? Around 57.50. We could see support for the stock around that range. And if it does, then there could be another bounce. That said, we've got pretty solid resistance. I'm going to go a little bit below that high at 62 and right around 61. We can see multiple periods. Let me extend this back. We can see multiple periods here where the stock has right here, and right here, we have multiple periods where we've seen the stock, come very near to the $61 point and then come back. So, Antonio, I would be looking, ideally, if you're talking about short-term signals, I would really be, looking for maybe a bounce and then a push above 61 if you're looking for a near-term catalyst, right? Because until then, you've got very, very limited upside. Excuse me. between where I would expect support to be and where resistance might be. So the higher probability signal would come from a break above resistance here. But that's also, you know, there's a lot that still has to happen in order for that to happen, in order for us to see any of those things kind of materialize. All right, let me just clean this up a little bit. All right. Resistance at 62 breaks and should run well. Now, and that's exactly why I like that 61 to 62 as a signal point, right? Because if we expand this, and let me change my chart. Here we'll go to a week time period, because if we do get a break above this level, and you can call it anywhere between 61 and 62, right? Remember, resistance is a range, not a price. You get that, you know, there's upside here in the very, very near term. There's distance between that 62 level up to the 200-day moving average, which is near to $68 per share. That's entirely within the realm of possibility. Even if we use our pivot levels to forecast earlier resistance, which is not unreasonable considering where pivot activity is here, about $3. So again, if you're talking about very, very near-term trading strategies, maybe some opportunities in those areas. If we get a break above 68, now we're talking even more upside here. Here's about 75. $81. So we start to see, you know, there's some incrementally larger ranges to work with if this, we have a nice little short-term trend, you know, starting well, not short-term. I got to remember I'm looking at a weekly chart. We've got a nice upward trend that has been building since November. And that's a very, very positive thing. That's actually a long-term trend right now. So this 200-week moving average is still a likely resistance point. But if this extends itself, you know, there's a lot of additional upside that we could be looking at. And again, if Tyson is one of those companies that you like, you might consider to be one of those legacy stocks that you would want to hold, then that could be interesting. Thank you, Antonio. All right, so that's Tyson. Again, looks like that's in a good position right now to expire, and that's a nice thing. The other put sale is on Suncor, working a little bit more with the energy and oil sector. So let's check in with those boys. Stock has pulled back just a little bit from this resistance point that we see. There we go. Well, it didn't want to do that. Anyway, we've got resistance right around 39, and so it's coming off of that right now. Support is very close by with the 20-day moving average at 38 and providing clear support for this rally that started back about 10 days ago. So we're seeing a lot of positive movement here right now. Now, just again for perspective here on my put sale, again, I sold the $37 strike price, brought in 60 cents on this one. So again, for 3 weeks, 1.6% is pretty attractive. And that's a nice positive movement. So this does look like I'm in a good position to see this one expire as well, if that's what the preference is. Just try to clean this up a little bit. I got a lot of little extra dots here. There we go. Antonio, the daily on TSN does not look good, continues downward. Yeah, the for Tyson, I like that longer term view a little bit better, Antonio. But before I'd be clearly bullish to the upside on a very short term trade, we'd need to see that break above 62. I would definitely be looking at it from that perspective. Okay, so Suncor on this one, again, I sold the $37 strike, and so that means that this is in a good position to expire. The same question as before, though, is there an opportunity maybe to think about possibly working with this on a more active scale? So here's the strike price that I've got, the 37. Ask on this is 1 cent, so that would be kind of nice. I wanted to close out this obligation now. Wow. There we go. I wanted to close this out now. There's lots of open interest. So I could set that 1 cent buy to close and get that almost immediately. If Joe were here, he'd be screaming at me right now. Close that out and then think about whether or not to roll my trade and maybe go up a little bit. How about this? This is kind of interesting. Here's the 38.50. Last trade was 60 cents, just barely under 1% for 7 days. So I brought in 60 cents on my original put sale, buy that back for a penny, hang on to 59 cents, pick up another 38 potentially for 1 week. Not a ton of open interest here, but if I didn't monkey around with the bid price on this, I would probably be able to get that very quickly. Here's 51 cents sounds better, but no volume, no open interest on this to go out 2 weeks. Very limited open interest for 3. Here we see a little bit more activity again around 38. Sorry, come on, there we go. It's down as far as it's gonna go. Go back to my pen. This one's also interesting for a month at 73 cents, offering a little over 2% for that period. I've been talking a lot, so let's again throw this out. What do you think? Ideas?
on this one long-term, Suncor.
You'd be very positive.
Absolutely.
Okay.
One, it's Canadian, so you know, but no, the again, and also being Canadian, I do hear a lot more of Suncor, but earnings still look good. It still looks as positive going, and it's in the mid range of it's been trading.
Yeah. It's interesting that considering the way that this, we've got a nice long-term trend here that is covering more than a year now, right? And we've seen it rise from what, $28 up to now where it's almost at 39. That's a significant increase over the last year, and yet it's still a good value. That doesn't happen a lot. And so that does imply, that there's still a lot of good things happening. Now it is very near to, look, we can see, it's very near to some all-time highs. So it's interesting. It is going to be a little bit constrained, technically speaking, at 41, but there's also a lot of, as Antonio was saying, there's very good fundamentals behind what Suncor is doing. And I think that if we talk about energy in a very, very broad sense, and oil specifically, some of the geopolitical things that are going on and affecting oil production, especially from the Middle East, and bringing in exports from that area, that makes North American energy products, Canadian, U.S., etc., more attractive because they're the ones that are easier to get to. And so there's kind of that element that I think is at play for companies like Suncor as well. So again, very interesting. So my normal plan is to do as always and wait for this to, I'm going to go ahead and let this expire. But considering the numbers that we're seeing here, there may be some interesting opportunities coming up next week to just keep it rolling and keep it cycling through. Now this again does have earnings next week, roughly. We'll see when those actually get announced, but that does imply, that's one of the reasons that this put sale did give me the returns that it did. That's why we're seeing a little bit of an increase in implied volatility for this 1 month here that we're out. Sorry, 7 days. Sorry, got to go back out here to the 16th. We're a little over 2% here. That's a little bit of a little bit higher implied volatility for 1 month than normal. And so, that the fact that does cross that earnings period is certainly one of the elements that's at play here. Stock has not been as volatile around earnings for the last year or so as what we were just looking at with Tyson. And so, whether they disappoint or not, this one does seem to does look like it tends to stay pretty consistent around those earnings periods. So who knows? Thanks, Antonio. Any other thoughts on this one?
Yeah, what I see is that the danger is down to 37.50, but I see it going past 40.
Yeah, and I see what you're saying in terms of 37.50. Again, depending on perspective here, right? If we're talking about a very, very near-term trade, you're looking at about $1.50 of risk, right? So from the stock's current price, we'll just call it 39. Risk is $1.50. Okay. If we then identify this current resistance at 39, that's what gives us that range. And then if we go up to this $41 level, $39 to $41 roughly, that means reward potential is about $2. So about $1.50 risk compared to about $2 of reward. If you want to throw into the mix the support that the 20-day moving average is offering right now, and again, this is kind of why I'm bringing this up, because I think this is actually a pretty significant thing. You know, look at the way that the stock has just traced right along that 20-day moving average for the last 10 days or so. Technically speaking, that's informative. And so it is not unreasonable, if you're thinking about a very, very short-term trade, to say I was going to buy a call or buy the stock for that matter at the stock's current price. It would be very practical to put a stop loss at where the an alert or a stop loss where the 20-day moving average is, which is right around 38. Now your risk shortens to about $1 compared to the same roughly $2 of upside. Now your risk is 2 to 1, and that becomes a little bit more attractive. So,
But if you go with the reverse head and shoulders that it formed as a pattern, they targeted as at a 42.89, I think it is. But I mean, anywhere going up there past the 42 gets the all-time, it gets to not quite all-time highs, but certainly gets there. And with all the power consumption and everything and infrastructure build out, and it's all going to be needed as we electrify. So I can't see this being a bad way to go.
and this does look, I mean, there are quite a few things here that are looking interesting, right? So, you know, this is just my analysis based on pivots, but yes, you're absolutely right. And again, I'm going to expand this to a week so we get a little bit better view. Yep, here a little bit more.
For charts,
here's this peak back in, go back to 2018, still around in that range. Let's go to a month. There we go.
We can get 42.
Yeah, here's 43 back in May of 2014. The fact that that's a 10-year-old pivot doesn't necessarily invalidate it. It just means that if we do see a push above 41, probably get to 43. From there, 47. You know, all-time highs here in the 60s, which is interesting. So.
And the fact that the earnings have turned quarterly from negative to positive also very well.
Absolutely. From a fundamental standpoint, there's a lot to like. We'll see where the we'll see where the technical charts go. Obviously, that one's a little bit of a different question. So, but a lot of interesting things. So, all right. So that's Suncor. As I mentioned, there are also a couple of covered calls on deck here that are expiring today. One on, and we've also talked about this one in previous weeks, as well as USB. So Zion, I was assigned this one at 43, and it's continued even with today's pressure. It's actually holding up pretty well. and is way above way above the 43 that I bought and sold. And okay, that's okay. I'm going to go ahead and let that be called out, and I'm going to move on. That'll free up some cash, and I'll be able to do some other things with it and decide how I want to redeploy that capital. USB is a similar kind of story. Now, on this one, my assignment was a little bit not different. I was assigned at 42. I sold the 42.50, so I was able to bake in a little bit of capital gain on this one. But again, we're up here 44.68, so you know I am giving up $2 of gains. But that's okay, considering the pace of this latest push higher. I believe that's kind of hard to maintain. And so this looks like this is due for a bit of a pullback. I'm not sure exactly how far that's going to go. It could be down here to 42.50, possibly down to where the 20-day moving average is at 41. But this is one, just like with Zion, I believe it's getting a little bit overextended, a little bit overbought. So we may see this one pull back a little bit. And if it does, maybe that just opens up new opportunities for the next round. Earnings came out for this one, excuse me, earlier this week. Looks like the market has responded pretty favorably overall to it so far. Okay, so that kind of sums those up. Let's open this up a little bit. I do have some other trades on deck for the weeks ahead, obviously, but excuse me. Let's go ahead and check in really quickly on Comcast. This is put sale that is on deck for next week. It's having sold the $37 strike price and brought in about 2% on that one. It's also picking up a lot of bullish momentum just in the last week or so. So it's up here around 40. Now, with a week to go to expiration, I think that maybe a conversation about rolling on this becomes perhaps a little bit more interesting. We do have earnings on this one next week, next Tuesday, as a matter of fact. So to Gibbs' point about waiting, when we were talking about Tyson, this may be worth waiting until after Tuesday, which would be okay for me because the next put sale I place is not going to be till Wednesday anyway. But here we are. And I sold the $37 strike. So again, I'm going to have to expand the number of strikes I see here. Asking price on this is 17 cents. Brought in 70 cents, so I can hang on to 53 cents of that. So that's pretty attractive, especially considering that I bought at I sold the $37 strike. And if I were willing to roll up, this is going to be heavily influenced right now by the fact that there are earnings pending. But here's 39.50, going a little bit out of the money. 79 cents on the bid. 39 has 60 cents on the bid for an extra week out. 1.5% in those cases. I do like the fact that open interest here is a little bit better. at 39. What do you think? Thoughts? Again, I've done a lot of talking.
I didn't take your Comcast trade.
Okay, not good enough.
Actually, I quit receiving your text on trades, actually.
Yeah, the text alerts have been deactivated, but you should still be seeing the emails. Those should still be going out.
I haven't been getting emails or texts
Okay.
on your trades, which is okay because I've had plenty of trades. As a matter of fact, I was gonna take the opportunity to give shout out. You know, I don't know, I've been with you for what, since 21, I guess?
Yep.
And I'm telling you that at least for this year, I've been averaging $6,000 a month on trading options that I learned from you. So,
Well, that's awesome. I appreciate hearing that.
yeah, so it's kind of nice because sometimes you get on the legacy stocks or the ones you want to keep, you know, sometimes they go down. So this keeps the portfolio even or in the upward direction. So that's kind of nice. You don't feel that hit so much.
Yeah, for every paramount.
Yeah,
And that
yeah.
and I throw that one out because that's one of my ugly sticks. I've got a few.
Yeah, I've got that one. It's one of the last ones that I'm cleaning out of my.
Right. So for every one of those, then you have the higher probability of success on most of these put selling trades is the reason that some of those don't hurt quite as much. So, Antonio,
Yeah, 2 months of my Paramount. I mean, my losses on Paramount equate to 2 months of gains with the options trading. So
right.
I would say it's okay.
Yep. Antonio, I see your mic's on.
Yeah, I was just saying on Comcast, I'm a swing trader, not an options trader, but
Right.
I just put it on my list because I really like this one for it's breaking a long-term trend of a downward trend from,
Yep.
I'm looking at this September of last year, and as a swing trader, it had its volatility, but it looks great. The only one that I mean that you guys would look at would be Enbridge, but yeah, I really like this stock for everything. Looks great on this one as a swing trader. I mean, it looks like it might go at 10% within 4 to 6 weeks, 2 to 8 weeks. I like this one a lot for a swing trader.
It needs to break 4150, which is where the 200-day moving average is, but we've got, it looks like it's holding pretty strong support. We've got, here's a pivot high here, another one here. We see it holding here. It hasn't pivoted yet, and this isn't totally validating support, but just the last 2 days, it's in fact today it came down to this level. It's coming back up again. This is interesting because this is where a gap lower started. So this provides a new level of resistance from that point until it's broken, and which is now validates these previous 2 pivots as support. So this is looking like a pretty good level, again, from a short-term perspective. A pivot here is a, we would have a, sorry, my handwriting is bad, be at this point, if we're talking about pivots, if we get a pivot off of this support point at any point, then that becomes pivot C. And so we get a nice ABC pattern working from here. And with this movement up here, that does provide a pretty good likelihood of seeing it break even higher. Again, ultimately, this 20-day moving average, or excuse me, 200-day moving average, is going to provide some resistance. So may hold up here a little bit, but if it breaks above it, again, I like what you're saying, Antonio. We could see, pretty easily some upside into here. Here's 43, 44 might be a little of a near-term stretch, but
Yes.
again, not out of the realm of possibility. But upside from 40 to 43, that's not horrible. That's a practical pattern. So
In the positive volume chart bars on a weekly basis, even on the daily, but on the weekly basis there's much positive trend on much higher volume than there's on the negative one, and it's above the average when you're having those positive chart bars. So and then the earnings has been in a positive growth for quite a while now. So again, to me, it looks like a very positive chart in the appearance, and it is at the low end of its trading range for the last year.
Yeah, and Comcast is kind of an interesting divergence from a lot of the other companies in streaming, broadcast media, etc. Not sure I'm ready to dive all the way back into those. I still have a little bit of sting from Paramount, I'm not going to lie, but that's this one has been interesting. So it's looking like it's moving well. We'll see if that continues to hold. This is a week to expiration. So again, I'm holding my put sale across this earnings announcement. If that makes you nervous and you're on this trade, then maybe some of these rolling ideas make sense. Yeah.
Earnings is in 4 days. That's nervous. It is below the 200 moving average. That's nervous.
Mm-hmm. Yeah. So I mean, there's definitely some things it's got to overcome, and we'll see how those play out. Like what Antonio pointed out about the earnings trend lately has generally been pretty positive. I mean, here we are, going back into last year through 2023, back into 2022, generally pretty positive indications. And so we'll see how this plays out. But so far that's been interesting. All right. Last week's put sale was on Hormel, selling the $30 strike. So let's just check in on it. And again, rallied pretty strongly. We're seeing some downward motion on that one. So it is pushing lower off of that 200-day moving average. Remember, I've been pointing out that as a potential resistance point on a couple of these other stocks we've been talking about, but this is a really, really good example of the power of the 200-day moving average. This is something that happens a lot. Other traders see this, and they are going to treat that. They're going to treat that as resistance as well. So it becomes kind of a self-fulfilling prophecy when you see a pivot going lower. Now, is it going to continue to fall over the next couple of weeks? Hard to say. I've got a little bit of distance down to 30, and that is below the 20-day moving average, which is around 31 right now. And we've got a lot of interesting pivot activity down here as well. So again, as a put seller, as somebody who likes working with consolidation ranges, I'm okay with this. This really doesn't scare me very much. it's not a great swing trading setup right now. Would not be unless we actually saw it break above the 200-day moving average. And even if you wanted to try to trade bearish, buy a put, something like that, short the stock, that's also not really attractive, because what we have here, if we work with this consolidation range and this declining 200-day moving average, what we have is a narrowing downward pennant right now, with still some room for this range to tighten even more. So this is I think Hormel is a stock that could continue to consolidate for the next few weeks at least, certainly leading up to its earnings announcement at the end of August. So again, we'll have to see how that plays and where it lands, but that's kind of what it looks like. All right, we've got a few minutes left. Let me toss this out to the group. What other stocks would you like to take a look at, or share some of your experiences with the group for?
Hormel is ugly, but if you can look at Enbridge, ENB.
ENB, right, there we go. Yep.
Thoughts?
Interesting pattern, isn't it? I did do an analysis on this one, I think last month. I'm not sold on the value proposition. The fundamentals are solid. The value proposition isn't quite where I would want it to be, but let me change my colors here. This pattern is positive. There's no question. And, we talk about bullish level 1, bullish level 2, right? This 20-day moving average forming this bowl and starting to point up, while the 200-day moving average is also starting to angle upward. Those are both very positive. Now, this is past the traditional bullish level 1 kind of signal point, but this is starting to, we're starting to see it kind of extend along the 20-day moving average, which is really pretty interesting right now, with some room, it looks like, up to a little above 37 in the very near term.
And a nice dividend.
Yeah, they do pay a nice dividend. That is very true. We expand this out, sir. Let me go to my 1 week, expand this view out a little bit. Here's some room up to about 43 if we see it break above 40 possibly. And then we've got a multi-year high up around 46.50. So technically speaking, this looks very, very interesting. The fundamentals are solid.
Another one with earnings turnaround too from long term, which is good.
Yes, yes, and to be quite fair, a lot of the valuation analysis that I do includes, for example, free cash flow. And so one of the elements that will play into that is if you see a company that is reversing a pattern of free cash flow to the upside, sometimes that depresses my value evaluation, because the more recent year or so of free cash flow information, if it's been declining, that makes it harder that lowers the historical ratios that I'm working with. And so you sometimes need 1 or 2 quarters of positive free cash flow growth before that you really start to see that translate into a useful value proposition. So if you're somebody like Antonio that likes the idea of this one and believes in the fundamentals, you see a little bit different picture in terms of valuation. Maybe some forward-looking analysis like PEG ratio or something like that gives you a little bit different view. Then you could be a little bit ahead of the curve compared to what I will do. I'll wait until this next earnings announcement right here and see how that comes through at the beginning of August. I'm going to be very interested in this because, thank you, Antonio, you put this on my watch list.
I did last time too, which was the last time I was able to go live. It's been hectic and it's a great summer, so.
Yeah, and that's okay. No problem. All right. Well, everybody, I appreciate your time as always. We are at the limit, but I appreciate your participation and everything you contribute. And Randall, thank you. He says have a wonderful weekend with those grandbabies. I always love the weekends when I get to spend some time with them. We took my granddaughter to, or not my granddaughter, excuse me, my daughter-in-law, their entire family. We took them to dinner last Saturday night. We're in this really hectic restaurant. My grandson was fussy. My son was trying to take care of him. He couldn't get him to settle down. He gave him to me to go to the bathroom by the time he got back. I'm not saying I have superpowers, but Papa put him to sleep. So anyway, that was pretty awesome. So
everyone have a good weekend. Happy trading, everyone.
Thank you, everyone. Appreciate it. Thanks, Ray. Thanks, Antonio. Everybody have a great weekend. Let me know if I can help you out between now and next Friday. Otherwise, we'll talk then.
Cheers.
Cheers.